Are you losing your money in the stock market? Have you ever wondered how small mistakes can ruin your money? How small mistakes can ruin your investments? Hello, I am Sanjeev Kumar, your stock market coach. We will discuss the five biggest mistakes most investors make and how you can avoid them. So, if you want to make your investment safer and more profitable, make sure to watch this video till the end. Just I am sharing the mind map for five mistakes. Yes, this is the mind map. Yes. Introduction. Investing can grow wealth but involves risk. We all know that with the help of proper investing, we can grow our capital rapidly. And usually, we grow our capital at the rate of 25% CAGR in the stock market. And if you grow your capital at the rate of 25% return, it means you are doubling your money in 3 years. And it is going to 10x in 10 years. It means if you are investing 10 lakhs rupees in 2024, it will become 1 crore. 1 crore in 2034 and 10 crore in 2044 in 20 years. And if you are investing 1 crore today, after 20 years, you will have 100 crore rupees. So wealth creation is possible, but there is risk. So should we should know how to manage risk. Mistakes can lead to losses. Definitely, if we make mistakes, then if we are investing 1 crore, there is chance to grow to 100 crore in 20 years, but there is also chance to become 1 crore, become 10 lakhs rupees. Today, we will uncover the top 5 mistakes you must avoid. Mistake number 1, lack of research. Blindly following tips or trends. This is the biggest mistake, and usually we see that number of investors make same mistake. Number of mistakes investor makes same mistake. Whenever we hear from someone or from any YouTuber, even from news channel on the TV, this stocks is in trend, this stocks is growing rapidly, and we suddenly jump on that stock without proper research. This is the mistake number 1. Ignoring fundamental and market condition. We, after listening from someone that or any tips, we suddenly jump on the stock without going to proper research. So this is the mistake number 1. And the solution is conduct thorough research. Tips is okay if we go for research. Okay. At first, what we should do? We should go for fundamentally. We should search. We should analyze the company is fundamentally strong or not. If company is fundamentally strong, then we should go on the chart and we should analyze that is this time is perfect to buy this share. This share is in uptrend or not. So is this the perfect time to buy this share or not? This is the crucial. Mistake number 2, emotional decision. Buying due to FOMO. This is the biggest mistake I was also doing earlier. So that is why I'm sharing all the mistakes I was doing earlier. FOMO means fear of missing opportunity. Like someone bought the share and this share is giving so much profit. Okay, oh my God, I have not bought that share. Just tomorrow when market will open, now I will buy it first this share. Oh, no, no, no. This is not the way. This is not perfect way to buy the share. Your friends is making profit in some share. It doesn't mean that you should jump immediately. You should go and see the chart. Still, there is chance to grow or not. Otherwise, what will happen? If you jump and if uh, any profit booking or any other region share can start falling, then what will you do? So we should not buy due to FOMO. Panic selling during downturn. Whenever we see any kind of downturn, even 2%, if market fall even 1%, we become panic and we start selling. And so I have seen number of people, number of expert sell all the share of his portfolio and then feel relaxed. And after 1 week, start regretting. Oh my God, what I have did. Market fall only 2%, 3%. Now market is okay. It is going upside. I should not sell the share. So this is the biggest mistake. We should not buy due to FOMO and we should not sell due to any news or any small correction. Solution is stick to a long-term strategy. Mistake number 3, no diversification. Concentrate investment in one stock or one sector. So this is also a big mistake. If any share is giving us profit, we start switching our all capital in one stock. Okay, selling other companies share and putting the money, whole money in the one company. So this is not good. And if we have 15 companies in our portfolio and whole all the company belong to one sector, this is also a big mistake. At least there should be 5 sectors. This is called diversification. Otherwise, high risk of losing everything. And solution is diversify across sector and assets. Mistake number 4, ignoring risk management. No exit strategy. We usually buy the share, but we don't have any exit strategy. So, according to me, I suggest everyone before buying the share, just listen again. Before buying share, just write it down. What will be the exit price? How much amount, how much percentage you are going to book loss? Loss booking is very important and we should be open to book a loss. But usually we avoid this. But in the stock market, if anyone is not ready to book the loss, it means the stock market is not for that person. So we should be ready to book the loss. Over investing beyond affordability. If the stock market is in trend and our portfolio is growing, we usually do, we manage to uh, we manage to take money from our relative, from our friends, from some other person, and putting all the capital in the stock market, and we think that our money can grow rapidly because it is growing. No, no, no. This is not a proper way because nobody knows that how long it will grow. So solution is assess risk and set limits. Mistake number 5, unrealistic expectation. Expecting quick or guaranteed profit. If someone tells us that just invest your capital in this share, I'm recommending you. So this is a guarantee that you will make 100% return. This is multi-bagger. It means that person is cheating you. In stock market, we cannot use guarantee word. And second, quick. Quick return is not possible in stock market. If someone is suggesting you that just follow me, I will give you some tips and you will get quick return. It means they are they are just misguiding you. So you should be away and you should be aware from this kind of event, because quick and guarantee is not possible. Is not possible in stock market. In the stock market, you can grow in long term only, and guaranteed no guarantee. There is no guarantee. Falling for scams promising high return. Yes, I already told you. Someone says that I'm giving you multi-bagger suggestion. No, 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 no. No, no one can suggest. How anyone can know that this is multi-bagger? Even a company's owner can't say that this company, this share of this company is going to become multi-bagger. This is the probability only. Solution: maintain realistic goals and steady growth mindset. Summary: research thoroughly. Don't jump. Don't jump with trend, with tips, or don't exit panic selling. Avoid panic selling. Avoid emotional decision. Diversify investment. Put your money in at your 15 stocks in your portfolio. Manage risk and set realistic expectation. That's all. I think we cover all the mistakes here, and uh, this was from my side. Thank you for watching. If you found this video helpful, don't forget to hit the like button and share it with others who could benefit from it. Subscribe to the channel and press the bell icon so you never miss an update on financial tips and stock market insight. Have question or thoughts? Drop them in the comment below. I would love to hear you. Until next time, keep learning, keep investing, and take control of your financial future. See you in the next video. Thank you so much.